GM, everyone. GM, everyone. Come on. GM. Please, my slide, but I can work without it. So, hi, everyone. My name is Emmanuel. I'm talking about real-world assets. Is it for real or just a fluke? Now, it's very important to know about real-world assets. Why? It is one of the foundations of DeFi, as I'll be showing us in today's talk. It's one of the foundations of DeFi. Let me just go straight to my talk. So, is real-world asset, is it the next big thing or was it the next big thing? Right? As reported by Chainlink, tokenized real-world asset is growing massively. I can show you a chart for that. So this is from DeFi Llama. Real-world asset, July 2022, low, spiked up by 2023, and we are still enjoying that spike till now. If you are the real OG of Bitcoin, you will know that when Bitcoin started, Bitcoin was not pegged on USDT. How many of us know that? There was no BTC/USDT. Now, as I'm going to be showing in the talk, one of the first examples of real-world assets was what we call now stable coins. So, how does that work? I'm going to show you that. So this is August 25, 2024. This is October 25, 2023. This is 2024. See the charts, right? So there's something happened in 2022 that's created this crazy TVL for, for real-world assets. So, what the heck is this? It's just tokenization of tangible assets that exist in the physical world being brought on chain, including cash, including what we call cash, right? Now, these are work. We have all these things off chain: currencies, commodity, real estate, carbon credit, bond, art, intellectual property, even stocks. Then they tokenize it. How? Firstly, there is a metric for tokenization. For USDT, stablecoins is 1:1, right? For gold, it differs. When you tokenize gold, it can be maybe something ratio 1 ounce or 1 gram of gold, right? So bring it on chain. And the reason why it's brought on chain is so that it will be tradable. That's the reason why you bring tokenized asset on chain. So one of the earliest form, like I said, exists in form of stable coins. Many people don't know this. I know in the beginning of this year, RWA became a vibe. Everybody was talking about Ondo Finance and all of that stuff. But RWA has always been. The reason why you can trade in DeFi is because this organization tokenized USD, and you can now peg whatever. You can trade Solana/USDT. You can sell. You can do base currency and quote currencies because of this tokenization. Now, in 2022, 2021, and 2022, through uncollateralized lending, these organizations were able to also create a borrowing pool, a pool allowing institutions to borrow funds based on credit worthiness. I'll drop this slide on Twitter so you can always check. As DeFi yield, increased in 2023, tokenized treasuries saw an explosive growth. Now, many of us know about Ondo. Last year, it was about very, very little, but as at April, skyrocketed, and that's because Ondo is about tokenized treasuries, US treasuries, right? So now the big question is, what's the difference between RWA and digital assets? That's 6 minutes. RWA, and the main difference basically is how their value is derived. Now, digital assets like cryptocurrencies are determined by the forces within the market: demand and supply, belief, greed and fear. That's what determines. But for for example, BTC fluctuates due to supply and demand, obviously, and governmental whatever. And it's also a deflationary asset with only 21 million coins in circulation. But on the other end, tokenized reward assets have more tangible values in traditional financial ecosystem, like precious metals, raw whatever. They are tied to tangible commodities. Therefore, doesn't look like the gem, really. So then, what are the examples of reward assets? Like I said, stable coins is one of the biggest examples of reward assets. In fact, it has the highest volume. If you check it on DeFi Llama, the highest TVL is with stable coins. Stable coins like USDT. This is a chart. Stable coins like USDT, USDC, PYSD. I didn't add it to this chart. PayPal USD also has joined. And they also have different chain. Like I told you, how is our asset being tokenized? You take it to a chain, right? And this is it. Theta is on, you can see a lot of chains, the Bitcoin, blah, 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 blah. It's all of the chains that some of these stable coins, are built on. Quick one. So yeah, this is also a chart to show the dominance of stable coins. See the dominance of USDT. Even on the charts, when you go to CoinGecko, first, second, third, fourth is USDT, right? So currently, reward assets, they are predominantly comprised of these USD peg tokens. Now, there's also commodity-backed tokens, and this is where stuff like Theta Gold comes in place and Pax Gold. They are basically pegged on gold, and like I told you, their value, look at something over here, where is it? This, while XAUT and PAXG are both prices of 1 troy ounce of physical gold, other people use 1 gram of gold. So there is a unit of measurement, right? There's a unit of measurement. So maybe if you own 1 PXAG, it means you own 1 ounce of physical gold, right? So there's also, despite the dominance of this precious metal, token backed by other commodities have also been launched. For example, uranium has been launched, right? Now, they always pass through strict protocols and strict compliance protocol. This is a chart to help you. Another one, this is a big one that is making a lot of money now, is token treasuries. And this happened during the bear market, 2021, 2022. Like I showed you in that chart, something happened in 2022, right? So during this crypto bear market, there was a surge in the demand of tokenized treasury, which were low risk, and also they generated steady yield. Unlike tokenized commodities, they are backed directly by the treasuries, but they also need KYC. There's a need for KYC. Quickly, so this is a chart. Like you can see, there's Franklin, there's Ondo, there's Matrix, there's BAC, there's Ashnode, there's OpenEDA, there's Superstate. This is their native chain. This is their market cap, and these are the current custodians, right? I'll drop this, whatever. So what's the structure? This is the structure of a tokenized asset, basically. Custodian, the treasuries, and the tokenized treasuries issuers. I'll drop this on Twitter so you can always follow it. There's an issuer, and after the fund is being created, there's a KYC that has to happen before you can be able to, acquire it. Now, this is an example of the quote and unquote, the world of tokenization or tokenized or reward asset. We have private credit, real estate. How many of us know of Paco? Paco, literally, how many of us stick on Paco? How many of us provided liquidity for them? So what they are doing is that they are using your liquidity to actually get real estate. Then they are now trading those real estate on chain. There's exchange, there's art and collectibles, obviously. There's ReFi, regenerative finance, that's carbon credit. And there are also stable coins, the dominant ones. Then there's also a project called ToroNet, which I work for as a community manager. They're actually a revolutionary modular gasless layer 1 chain. And basically, all they use is that they use tokenization to address real world situation. Recently, we provided farmers with fertilizers, helped with plastic weight, and also tokenized electricity, and also else, right? This is one of the posts from USAID, supporting one of the projects that we are incubating, which is AgriFi. And they are live supplying 600 farmers with fertilizer in Kaduna. So the next example is regenerative finance. All of us know about this. If you don't know that, you can read about carbon credits, right? I don't want to take a lot of time. So this is tokenized carbon credits. There's ocean marine conservation, renewable energy, very, very important. And there's public good. Even Web3 Bridge is also enjoying it from public good, right? Basically, what Web3 Bridge is building is considered as public good, training people for free. Yes, real estate, arts and collectibles, and all of that. These are just examples, basically. I'll drop the chart. So looking ahead, what then will reward assets do in DeFi? Like I said, USDT, the advent of USDT actually created this ecosystem called DeFi. What is the power of the market? What is the soul of the market? Liquidity is the soul of the market. Without liquidity, you can't trade, you can't buy, you can't sell. And that's what happened when they rug pull a project. What happened? Pull out liquidity. You see your money increasing, but you can't have it in your wallet. Yes or no? 10 minutes is done. Okay.